Last Tuesday, we discussed the possibility to have a higher low form because of decreasing of the supply level. Even we have a pullback from this axis line. We mentioned that you need to come in above the high of Mondays, and that's classified as a reversal bar, followed by continuation of the upside despite the long rejection tail, but no follow through to the downside. That is only the second test of the axis line. The first test comes with relatively high supply level and attempt to consolidate here with these two small candle, but we see some form of the failure with low supply level, which is encouraging. Suggest we could see a higher low form, which started on Tuesday with a continuation of the upside. Last Friday, there is a commitment above this axis line. This is meaningful because this is the first time that I commit above the axis line, followed by Monday test bar. All of this comes with relatively low volume. That's also constructive, suggests a continuation to the upside. We emphasize many times, this level, the axis line, doesn't attract a lot of the supply. That's why the volume stay on a low side, unless it could attract a ton of the supply. The rally could carry on, but not necessarily like one swing up. It could be zigzag type. For example, there's up, there's a down, there's another up. It could come down, chop around until it reach the axis zone. The zone, the key target that we have been emphasizing is 5,700 to about 5,800. The first level that you need to overcome is the gap. That is, the gap is testing the gap, but without attract a lot of the supply. I still view this as bullish and likely to have a continuation to the upside until it hits somewhere around 57 and even 5,800. That's the key zone that we should pay attention to monitor whether there will be excessive supply, because that is also the obvious zone that traders, investors are likely to sell into strength. If they are monitoring this 200-day moving average, which is the red line, that is right at 5,800 level. It could coincide with the 200-day moving average, but of course, 50-day moving average is also turning down, and that will act as resistance. I'm anticipating going up until we hit 57 to about 5,800. That's also aligned with the axis line, axis zone, and to have some sell into strength to attract excessive supply, something like here, or even here. We could have another test coming to test 5,000. This is the leg that we need to be extremely careful, because this will be painful and will hit a lot of the individual setup. That's why I keep emphasizing whatever setup that we discuss since a breakdown here, that's to bet on a short-term rebound rather than to ride the whole chart for multi-months. We need to be quick and monitor for any potential reversal. But the swing is still up. We could have further upside until probably 57 to 5,800. We need to monitor for potential reversal signal. If we got some form of the spike of the supply or even big bearish bar, then we'll need to be careful, because that could signal the start of a reversal to have another downswing, to have a test that should kickstart this complex trading range. That's something that we need to watch out for. So far, short-term swing is up after Tuesday reversal and continuation of the upside. Commitment above the axis line here suggests we could still push up. No threatening supply coming out. This all pointing to a bullish direction until we see the attraction of the excessive supply. The direction is still up.